All right, guys, let's get started. Welcome to our pre-veIDO AMA, where I'll be answering all your questions about the IDO or anything else. It's been a while since we did an AMA, so a few things have happened in the meantime, so you might have other questions as well. Thanks everyone joining in on Twitter and on Discord. I'll be starting off by answering all the questions that are posted in our AMA questions channel in our Discord. And then we can move on to Twitter, see if anyone has any questions there. All right, so let's get started. First, we have One Step Ahead asks why we can't deposit USDC in the IDO. When will it be fixed? Before the IDO, I hope. Maybe you don't need more TVL. Let's see. So I guess you're referring to the IDO. I'm not sure, like maybe you're referring to the Sol USDC pool because that pool is full and you can't deposit. But just to answer both, the IDO hasn't started yet. That's why you can't deposit. You will be able to deposit when we start, which is on the 23rd at, checking my notes, I think it's 15 o'clock UTC. But yeah, we have the time will show for you natively if you check our event in our Discord. Yeah, so that's why. And let's see. Oh, you amended your question. Cool. And the Sol USDC pool is full because because of our target liquidity, which is something you can read more about in part 4 of our tokenomics. Right now, it basically just serves as a cap to the pool, but it will not be for that purpose in the future. So yeah, just so you know. All right, and then you have a follow-up question. Can you explain the difference between the different flares? Do they have different functionalities? So the traits are basically purely aesthetic. They don't have any advantage over another in terms of like how much Liquidity tokens they're allocated, for example. So yeah, it's purely aesthetic. So like in practice, even though it is purely aesthetic, you do see rarer flares tend to command higher prices in general. So there is that to take into consideration, but yeah, otherwise all flares are equal. We are what's the word? Egalitarian in our setup. Yeah. All right. Yeah, Blob Hair answering all the questions for me. Shout out. Blob Hair always filling us on Twitter. All right. I'll just say late asks, hi, can I ask a question through voice on AMA? Do I need to type the questions here? It looks like you typed it, so I'm just going to read that. From where I can get some audit performance of the team. I know I can see contract address and make some script to audit performance. Any third-party service which does this? So when you say audit the performance of the team, do you actually mean like the performance of our pools? Because you're talking about the contract address. Yeah, performance of the pools. Any third-party service that does this, right? As far as I know, there isn't yet. I mean, Jupiter keeps track of how much volume we get on their platform. That might be about it so far. Nothing else I'm aware of. Yeah, and like obviously that's something we definitely want to improve in the future, like provide more statistics because there's like so much we could provide on that front. And that'll be even more true when we launch our token and we have VE Liquidity. And so like, people wonder like, okay, how much of the Liquidity token supply is locked right now, for example? And what's the like mean lock period for all VE Liquidity and like all that stuff. And then for the pools, yeah, third-party services having data on our pools would be cool. Although, like, I would guess that if a third-party service integrated us, they're probably not going to like try to recalculate everything based on like the data on the blockchain. They're probably just going to look at the numbers on our website and then just like reflect those in their on their site. I think that's what they do for everyone. Like they don't like try to calculate the trading performance from scratch. So yeah, at least that's my understanding. I could be wrong on that. I'm not sure. Anyhow, yeah, we would like to add a lot more visibility into statistics. But yeah, it just wasn't a priority right now because we're still optimizing our decks. So that basically comes first. And yeah, once we've done most of what we can on that side, then we'd like to begin working on like improving our UI, improving stats, all that. All right, moving on to the next question. We have, where am I? Okay, so One Step Ahead asks, 1/10,000th of 0.15%. Is that the percent we get from holding flares? No, so the 0.15%, where is that coming from? I'm not sure where that's coming from, but so what you get as, so like a single flare, or actually I should say, so flares as a whole, they get 1% of the total Liquidity token supply. And then there's 10,000 flares, so each flare gets 1/10,000th of 1%. Hope that makes sense. All right, next we have Cortez. Do we have a rough estimate on how much Liquidity we're getting per flare? Yes. So the minimum is 100 Liquidity. And then it can be more than that because it depends on how many flares we've bought back and how many flares are listed on marketplaces. Or I guess to put it more simply, how many flares are staked in total? Because only staked flares will receive Liquidity. So if you don't stake your flare, you won't receive anything. And so if they're listed on the marketplace or we bought them back, they won't be staked. And if people aren't paying attention, they also won't be staked. So yeah, that can increase the amount of Liquidity you receive. All right. Calon asks, if we currently have LP tokens in some of the pools, as the protocol-owned liquidity increases and rewards go down, will we need to sell those and buy VE Liquidity? Or would there be any option to simply switch them somehow to VE Liquidity? Right. So once we have the program that will sell discounted Liquidity as VE Liquidity in exchange for your LP tokens, yeah, one of the options you'll have is to trade your LP tokens for the VE Liquidity. I guess you're asking if there's going to be like an automated option where, like, so this is something I've thought about and asked the devs about. It would be really cool if, for example, you can set like the discount at which you want your LP tokens to automatically be exchanged for VE Liquidity. So say like you can program it so that when the discount on the VE Liquidity reaches 40%, then I want the program to trade my LP tokens for VE Liquidity. Like that'd be really cool because otherwise you might have to like constantly be watching until it reaches the point where you're satisfied to trade your LP tokens for the VE Liquidity. So automating that would be great, both for the users and also for the protocol, because it probably means more people will trade their LP tokens for VE Liquidity. And then, I mean, you mentioned also the APR for your LP tokens, basically, because as we acquire more protocol and liquidity, then the share of trading fees that LPs receive will go down too. So if you could also choose based on that, I mean, well, now it's getting pretty complex. If you're trying to determine when to make that trade based on the APR and the discount on the VE Liquidity. So not sure if that would work. Sounds pretty complex. But yeah, at least like based on the discount on VE Liquidity, that'd be cool. Or, I mean, you're saying just on the APR alone. I don't know. Like to me, the more important part is the discount on the VE Liquidity. Yeah. I mean, maybe that's just my opinion, but that seems more important to me. Yeah. Anyhow, I think you get the idea. That's something we'd like to have in the future. I mean, right now we don't even have that program fully developed, so yeah, not something for the near future, but yeah, something we're certainly thinking about because it'd be really cool to have that. All right, let me take a sip. All right, late follows up with a question. Will the fund be managed through a multisig? If yes, who will be the signee? So we don't really talk about our private key management practices because we don't really see that there's any advantage to explaining them except to basically give more insight to hackers. Yeah. Next question. Cortez says, will the final token price be determined by the amount of funds raised for the IDO, or is it at a set price from the start? So it is not at a set price. It is dependent on how much USDC is invested and also dependent on how long people choose to lock their tokens for. The longer everyone locks their tokens for, the higher the starting price of the token. It can be kind of counterintuitive because it's different than like the standard Mango style IDO that people are probably used to because a lot of Solana projects have used that model. And in those models, it's only dependent on how much USDC is raised. But for us, there's also the lock period to take into consideration. So if you want to understand that better, you should check out part 6 of our tokenomics. We explain everything in detail. We also provide a spreadsheet that you can play around with, just like input different numbers to see the different results of the IDO. Yeah. All right, next we have Dioforce asks about the recent announcement. I understand it's like this. Flares can lock or stake for 1 year. If you stake for 1 year, you gradually get Liquidity, but at a higher rate than locking because it accounts for flares that are locked, swept, listed, etc. If you lock your flare, you get 1/10,000th of upfront as 4-year locked VE Liquidity, enabling you to participate in protocol revenue. Yeah, I think that's correct. I'll just state it again for those who may have missed it. So there's two options. Yesterday we announced that we're enabling this other option where so before we announced this option, what we were planning to do was enabling people to stake their flares, and then over the course of the year, they receive Liquidity tokens, and it would be a linear release. So it's just a gradual trickle. And people could unstake their flares at any time. There's no locking. And Yeah, so the fewer people who stake, the more Liquidity each staker gets, type of thing. But then we added this additional option where people could lock their flare for a whole year. So now they can't withdraw whenever they want. They have to lock it for a whole year. And in exchange, they receive their allocation of Liquidity. So that'd be 100 Liquidity. They receive it upfront as 4-year locked VE Liquidity. So basically, the advantage of choosing this option is that you get your Liquidity as VE Liquidity quicker, which means you get earlier access to protocol revenue. And the downside is that your flare is locked for a whole year, whereas with staking, you could unstake whenever you want. And then also, you're receiving 4-year locked VE Liquidity instead of Liquidity. And so basically, you have less optionality because Liquidity, you can always convert to 4-year locked VE Liquidity whenever you want. But the opposite is not true. You have to wait for your VE Liquidity to unlock into Liquidity. So yeah, those are the two options. I'm sure both will be used. With staking, you receive more Liquidity because of the people using this lock option, as well as the flares that we swept, and those are listed, and anyone else who doesn't stake. But if you're more into the protocol revenue side of things, then the locking option is probably better for you. So yeah, choose whichever is more suitable to you. All right, Late asks, how big is the team? How do you plan to hire more members? Any plans to move multi-chain? So currently we have 4 core team members, and you can see those in our team channel in the Discord. And then we have a few like part-time helpers, and these people have the Burninator role in our Discord. And then, yes, so after our IDO, we do plan to expand the team. How? Basically just like ask. I mean, so I'm sure we'll ask our community to see if anyone's interested. Actually, we already know some people are interested. And then maybe we will reach out to Solana. They have like a jobs board, I think. Use Twitter as well. I mean, like there's a lot of ways to find people who are wanting to work. And any plans to move multi-chain? So it's something we've considered. It's definitely not straightforward. There's a lot of technical complexities to take into consideration. Perhaps the major one is, or maybe two. One is that on other chains, the block times are going to be slower than Solana, which means there's an increased risk of being front run. And in addition, Pith is currently only on Solana, so we would need some other oracle. So then we also have to think about how fast is the oracle. If the oracle doesn't publish every block like Pith does on Solana, then I mean that would mean we were even slower than the block times of the chain itself. So like those are some considerations. And then also like, you know, we might have to build everything from scratch because the current program is written for Solana and you can't just port that over to a new chain. So like it would be a huge endeavor for sure. And I mean, yeah, it's not like something we're working on right now at all. Like, you know, take it one step at a time. First, conquer Solana and then move on type of thing. So yeah. All right, one step ahead asks, so we can stake flares straight at the 23rd. So it'll be soon after the IDO. It won't be on the IDO date. But yeah, soon after the IDO. Cortez asks, will Igniter holders get to participate in the IDO early? No, the Igniter LP passes and flare holders or anyone, no one gets any advantage in this IDO. IDO is free for all. So yeah, no early participants. Glue04 asks, if the 30 million USDC target is raised before the 24-hour window is up, will the IDO finish early? Yes, it will. If so, does that mean it's possible large whales could buy up all the Liquidity at the start of the IDO? Yes, that is possible. We think it's not likely. I think people are especially thinking about this because of the recent Stargate event where Alameda bought the entire allocation. But I mean, I don't think we're really comparable to them. Like, for one, we were definitely not as hyped up as they were. Like, they were much more well known than we are. And the other thing is they sold purely liquid tokens, whereas for us, we're selling vote escrow tokens, so there's a lockup inherent. And so, like, if you understand the way like venture capitalists tend to think, they basically want to get in at a relatively cheaper price and then have as short a lockup as possible. And so, like, making a $30 million bet on a single protocol, like, first of all, that's a giant bet size. And so you have to have like extreme confidence to make a bet of that size. Like, even if like say we took VC money and like VCs were investing in us in like early rounds, like none of them are going to give us 30 million. You know, it's like way too large. So anyways, like, it's not impossible, but we think it's unlikely. So yeah, not too worried about that. All right, Hachi asks, recently someone posted the LinkedIn profiles of the founding team. Then all the team members decided to delete their LinkedIn profile. Why is that so? This action kind of hampers the trust factor of the prospective investors who are bringing their money without any sort of audits and code being closed source. Yes, so someone did find the LinkedIn profiles of the two of our founding members. And so actually those profiles were created at the request of some VCs back in the day when we were still considering accepting money from VCs. And so they were just there and we had kind of forgotten about them. And so yeah, once we realized that those were still up, we turned them off, or like made them private. And that's because we are a anon team, as you know. I mean, this is nothing new. So once we realized that there was information about some of us available, we made that private. Like, it's pretty straightforward. I mean, so basically what you're asking is, like, why are you anon? And this hampers the trust factor, as you say. Which, if you're not willing to invest in anon teams, like, that's fine. We think there's very little advantage to doxing ourselves. It doesn't really accomplish much. I guess the thought behind it is usually if people dox themselves, then when they do scam you, it's easier to catch them because you know their faces and names and whatever. And like, maybe that's partially true, but these things are also easy to fake. So like, there's been plenty of people who have doxed themselves and still scammed. So like, doxing is definitely not a perfect way to like determine what's a scam and what's not. And so like this question gets asked pretty frequently. So I refer people to this one post I made that explains why it doesn't really make sense for our project to scam. So to basically run through that logic again, let me take a sip. So back in December, we did our NFT sale. Of course, we were still anon at the time, and our project was much less well known. We had our DEX already up and running, but it was seeded with the team's money. But it was working great. The APR was like really high on the Sol USDC pool back then too. Anyways, we had this project going, and then we raised like 2 million worth of Sol, 15K Sol from the sale of our NFTs, which is a lot of money, right? So like if we wanted to scam, that was the timing. It would have been perfect. We weren't that well known. We just made easy 20 million or $2 million. Actually, maybe it was more back then because the Sol price was much higher. So yeah, it was like perfect timing to scam. Like, we would have made headlines for one day and then everyone would have forgotten about us. It's like just another NFT rug pull, and it would have been super easy. But we didn't do that, obviously. And we continued to grow our project, our DEX, that is. And like now we're integrated with Jupyter. We're doing like really good volume. All our pools are very profitable, like the best in the business, right? Like for each pool, like when impermanent loss is taken into consideration, these have the best APRs. Like you can't find this anywhere else. And so you could say like, okay, maybe you guys just didn't rug pull the NFT so that 5 months later you could do this rug pull for the IDO. So instead of taking the 2 million, it was just a huge setup for a 30 million rug pull. like I don't know, like maybe you disagree, but for me, like that's like the dumbest thing because first of all, like 2 million, 30 million, it's not a huge difference. Like there's a limit to like how much money you can utilize, and like for the vast majority of people, like the difference between owning 2 million and 30 million is not that large. Like 100K to 2 million, okay, like that's a huge difference. But like once you have a million, like that's a lot of money. Like there's not too much more you can do when you have extra millions. And plus, like we put in like this tons of work over these 5 months, building our DEX, creating our tokenomics, building our community. Like we did all this stuff, right? And if that was all just to get like more millions of dollars when we could have so easily just taken the 2 million, I don't know. Like to me, it just makes 0 sense. So anyways, there's my rant on why it doesn't make sense for us to rug, really. Yeah, and so the LinkedIn profiles. Yeah, I mean, there's just like really no reason for us to put up the LinkedIn profiles. We only put it up because some VC asked us to. And then we forgot about it, and then someone found it. So then we made it private. We care about remaining anonymous. And actually, there are advantages for you as an investor for the founders to remain anonymous. If the founders are doxxed, that means people can find you more easily. And that also means that your founders are at higher risk for example, the $5 wrench attack, where basically people threaten you with physical violence and steal funds that way. And because the team is custodying the funds raised in the IDO, if they're at higher risk of the $5 wrench attack, that means your investment is at higher risk for that too. And so like being doxxed is not like, it's not at all obvious that that's a good thing even for investors. Like, it seems like it's only especially useful when you're very concerned that something is going to be a rug pull, because yeah, then like perhaps you can be more confident that like the authorities will have an easier time finding them after they rug pull if they do. But yeah, it's not really the case for us, I think. I mean, just look at our history, and we don't really fit the typical bill of what a rug pull looks like. Yeah, also, like, look at our marketing. Do we look like a rug pull? Like, we're such a low hype project. If we wanted to just, and like our IDO is capped. And everything we're doing is just, it doesn't really look like what a straight up rug pull would do. At least that's my opinion. Anyhow, I've talked about this long enough. So I'm going to move on. All right, Dioforce asks, is there a rough timetable or at least a speculation as to when Liquidity protocol-owned liquidity will render LP providers more or less obsolete? It'd be nice to know when it's optimal for us to convert our LP to discounted Liquidity. All right, so first part of the question, LP providers becoming obsolete. I don't think this will happen because the thing is, we're going to constantly add new pools. And each time we add a new pool, it starts with 0 protocol-owned liquidity, which means it's going to start out with only liquidity providers' liquidity. And then we gradually sell Liquidity tokens as VE Liquidity for the LP tokens. And so the protocol-owned liquidity of that pool will gradually increase. So it's a constant process of like adding a new pool, starting out with liquidity providers, and then gradually acquiring liquidity, and then LP providers gradually get disincentivized, so they begin withdrawing their liquidity or converting it to VE Liquidity. And yeah, so yeah, they'll never become obsolete per se. They always have a role when we spin up a new pool. And then it'd be nice to know when it's optimal to convert LP tokens to discounted liquidity. That is something that doesn't really have a mathematical answer because like, so one thing with LP tokens is they have their like dollar value based on the assets they contain, but they also have optionality of you can always withdraw your LP tokens into the assets. And Liquidity, because you're buying it at a discount, it's like the face dollar value of it increases when you convert your LP tokens to the Liquidity. But because you're buying VE Liquidity, actually, you're buying the discounted Liquidity and then locking it. So it's like, how do you assign a dollar value to the locking component? And that's a time component, and so it really depends on your time preference. And this is a subjective thing, so it's going to be different for each person. So yeah, you can't really calculate it really. So no one can tell you what's optimal. That's something each person will have to figure out for themselves. All right, Glue04 asks, how will the 4-year VE Liquidity unlock work? So once you receive VE Liquidity, regardless of whether that's locked for 4 years or shorter, you can go to our rewards page, and then you can click on the Start Unlocking button, and then that will begin unlocking your VE Liquidity. And then when it's unlocking, the VE Liquidity will decay over time, so its balance will gradually decrease, and at the same time, your locked Liquidity will gradually begin to unlock. And so as the VE Liquidity is decaying, you can withdraw portions of your locked Liquidity if you want to. And yeah, that's how it works. And follow-up question, or wait. Yeah, okay. Farm61 asks, will there be an exchange / market to purchase VE Liquidity / Liquidity post IDO? Yeah, so for Liquidity, we're going to spin up a Liquidity USDC pool on our platform. So that'll be the market for that. And then for VE Liquidity, well, VE Liquidity is not a transferable token, so it cannot be traded. But 4-year locked VE Liquidity can be converted to X Liquidity on a 1-to-1 basis, back and forth. And we will create a X Liquidity USDC serum market. So yeah, there you will be able to buy and sell X Liquidity. All right, one step ahead. Thanks for the answer. Also, if 30 million USDC is raised, did you calculate approximately how long it will take to own your liquidity? Not sure what you mean. So like if we raise 30 million USDC, about 80% of that is going to be protocol owned liquidity, and we're going to deposit it in our pools. So yeah, it happens immediately, basically. It'll take some time to be able to fully deploy all the liquidity. Adding new pools isn't trivial, requires some testing and stuff. So yeah, that'll take some time. But yeah, the owning the liquidity part, that will be immediate. Right, Late asks, how much is the team money currently in? And how much is the sale of NFT did we raise? Not sure what you're asking about team money. We didn't make any money from anything so far, if that's what you're asking. The sale of the NFT raised 15K SOL, and that's all in our liquidity pools right now. And now it's much more than 15K SOL, partially because we sold a lot of the SOL while it was higher in price, like $170 or $80. So we could get USDC to pair it with, so we could trade with it. And then also because we earned a bunch of revenue, market making, and from royalties, which we reinvested into the pools. So yeah, now there's a lot more SOL, but yeah. And they say, I checked the contract address TVL, looks like 3.8 million total. Can you give some current Treasury breakdown? Let's see. Let me pull up the our pools page. Maybe you can't see this in the recording, but okay. So one thing, we have the UXD USDC pool. This is fully funded by the UXD team, so that is not our liquidity. Then USDT USDC and USD USDC, that is Flares' liquidity, I believe. Actually, hold on. Someone asked this before, and I did post a breakdown somewhere. See if I can find it. Let's see. Okay. Where was it? I know I posted it somewhere. Okay, I'm gonna try to look for it one more time. Let's see. Here we go. Here we go. All right. So current breakdown. We have Sol US. So this is from 5 days ago. So maybe it's slightly different, but this is approximately correct. So Sol USDC 1.2 million. Sol USDT 200K. Sol UST 100K. BTC USDC 200K. ETH USDC 100K. Ray USDC 100K. USDC USDT 100K. Excuse me. All right, so there you have it. Let me find my place. Where am I? Okay. Yeah, so that's the breakdown of the flares' liquidity. Technically, we don't call that the Treasury. The Treasury will be the Liquidity, the 59% of Liquidity that will be owned by the DAO, basically, the Liquidity DAO, the VE Liquidity holders. All right, and then your next question, how also accounting works between team fund and community treasury? Yeah, so what is the team fund you're referring to? If you mean the portion of the IDO funds that goes to the team, like basically we just use that as like salaries and expanding the team and like all that. And then the community treasury is Liquidity tokens. The team fund is USDC. The community treasury is Liquidity tokens. And the way we use that, we talk about it in, I mean, basically the only use of it, the only planned use of it right now is to sell it as VE Liquidity at a discount for LP tokens to grow our protocol own liquidity. That's the only planned use. And I'm asking you guys seeded initial capital. Yeah, so we didn't raise any seed money, if that's what you mean. So like this is the first raise we're doing, this IDO. Yeah, I hope that answers your question. If not, you can follow up. One step ahead, you got a lot more to win with your system than doing a scam. Exactly. Exactly. Late, what is the team vision? Where do you see Liquidity after 2 years in terms of turnover, treasury, etc.? Our vision, huh? I mean, basically, we just want to increase liquidity on all the pairs, trading pairs that we can, and generate a profit in the process. I mean, you know, basically what we're doing right now, just adding more and more pools, adding deeper liquidity. That is basically like the short-term vision. You ask 2 years. I think 2 years is a little too far out to really project anything. We'll probably do some pivoting in that time span, right? So like, yeah, our short-term plan is like everything laid out in our tokenomics, like building out that infrastructure and yeah, like increasing the number of pools and the amount of assets that we have. And then beyond that, like we have some ideas, but like they're not like set in stone. Like we need to be agile, flexible. So like no point in announcing them if we're not like set on doing them. So yeah, like we're thinking about stuff, but yeah, 2 years is a little bit far out. Gaius asks, in the event the amount raised would disappoint somewhat, would the project be in serious trouble, or would it just mean slower growth? Yeah, so like if it's super low, we could be in trouble because like this is basically how we're funding our team, right? We're not raising from VCs, so this is our way of funding our team. And yeah, if that's like extremely low, then we could be in trouble. But yeah, it seems unlikely. Like say we just raise 1 million in total. That seems like an unlikely outcome, so we're not too worried about it. But yeah, that would be problematic. Hachi asks, any plans to open source the code base of your system? Any timeline on this? Yes. If you look on our roadmap, that's in part 6 of our tokenomics, we include getting an audit and then open sourcing after that. We think it's important to get an audit before we open source, because otherwise you're basically just opening yourself up to an increased likelihood of getting hacked. I mean, we like open source for sure, right? But there's a time and a place for everything. And if you're familiar with the Casio hack, they were open source, I think. Yeah. Which, I mean, definitely contributes to that, right? If you're open source, it's much easier to find ways to hack your code. And so like open source, it sounds great. And, in many ways it is great. Like when things are open source, it leads to more innovation in general. So that's great. But if you open source before getting audited, before you're highly confident that your code cannot get hacked, then yeah, you're just adding risk for no or very little additional benefit. Any plans to bring Seifu funds on Liquidity in case there's something wild happens and LP pools in turn investors lose all the money? So I guess you mean like an insurance fund? So the thing about an insurance fund is basically it would be idle capital used very inefficiently. So just like to give a hypothetical example, say so we're using 80% of the IDO funds to as protocol owned liquidity to seed our liquidity pools. But say we used half of that as an insurance fund. So in case the other half just all disappears somehow, then we have the insurance fund. I'm not sure this makes a lot of sense because, okay, now you have half your capital just like sitting there, not really doing anything, when it could be earning more. I mean, so like, yeah, in case the hack happens, you have half the money left to, I don't know, restart. But I mean, like you still lost half the money. Like it's still like a critical event, right? So yeah, I don't think it makes much sense. Um, it's also like non-trivial. Like, okay, how much should the insurance fund be? Like, if you lose your pooled assets, like the price of Liquidity is gonna go down, right? It doesn't matter if you have an insurance fund or not; it's still gonna decrease. So it's not really clear to me like what purpose that would serve. Yeah. Yeah. Hope that makes sense. Wait, did you have a follow-up question? No, okay. Hachi also asks, also, how do you decide the target liquidity for any pool? Like right now, if you are able to raise 30 million, then how would you decide the target liquidity for all the pools on Liquidity? So the target liquidity is something the team chooses. And so conceptually, I don't know if you read part 4 of our tokenomics, where we talk about like what the target liquidity is supposed to be. It's basically the point at which the trading fees earned per LP token is maximized. So it's the point at which we can maximally utilize the liquidity most efficiently. And if we have less or more liquidity than that target liquidity, if we have less than it, then we could increase our APR by adding more liquidity. And if we have more than it, then our APR will start to decrease, basically. The question is, how do you, like you say, how do you find those target liquidities? Unfortunately, it can't be mathematically deduced. It has to be found empirically. And so the team does this based on how much volume there is, how much competition there is for a given trading pair, how reliable the Pyth Oracle is for a trading pair, various factors like this. And yeah, it like I said, it's an empirical thing. You can't calculate it. And so it's something that has to be adjusted as well with time, because the conditions are always changing, right? Like how much volume and how strong the competition is and all this stuff. So, I mean, there's no like simple answer to this really. Basically, the team just tries to optimize it based on these various factors that influence it, which may be a unsatisfactory answer because it's kind of vague, but yeah, it's kind of in the nature of the problem. So, all right. Dioforce says, yeah, I guess I just don't quite grasp it all yet. How does Liquidity gain more protocol-owned liquidity in a pool that consists mostly of LP tokens? Okay, so I'll give you a simplified example. So say we have a pool, starts out with 0 liquidity. It's a new pool. Now, liquidity providers start adding liquidity because they know that Liquidity generates high APRs while mitigating or even reversing impermanent loss. And let's say they reach like 90% of the target liquidity, which is quite high. Now the share of trading fees they're going to be getting is like pretty low. Let's say it's like 10% now. And they're like, well, if I'm only getting 10% of the trading fees, it's no longer worth it for me. So a bunch of people are going to be saying this, and then there's going to be 2 types of LPs. One is just going to be like, well, screw this, I'm done, I'm withdrawing my liquidity. And so they leave. And the other one is like, well, if I convert this to VE Liquidity, which has an average APR of whatever across all the pools it has, well, then it's actually a higher APR than the APR I'm currently getting from just these 10% trading fees. And I get the VE Liquidity at a discount, so there's also that. And so they're like, okay, I'm just going to trade my LP tokens for protocol and liquidity. So these 2 different types of people have 2 different effects. One is that the total amount of liquidity in the pool goes down because the LPs leave, and that will increase the APR. The other one is the LP is converted to POL, protocol and liquidity, and in that case, the total liquidity in the pool doesn't change, but the protocol earns more now, because instead of just taking a portion from the LPs, it gets 100% of the trading fees from that portion of the liquidity, the protocol-owned liquidity. And so this process can repeat, and LPs gradually convert their LP tokens to protocol-owned liquidity. Yeah, and then potentially like there's also bribes, right? So if there's bribes, then you might have people um, buying or creating LP tokens just to buy VE Liquidity. It's like they don't even care about providing liquidity for that pool. They're like, hey, look, this pool has the highest discount on VE Liquidity. So I'm going to create LP tokens for this pool and convert it to VE Liquidity because I want more VE Liquidity. And so that pool gets more liquidity and more protocol on liquidity. And so, yeah, with time, the LPs are gradually pushed out because they have an increasingly smaller incentive to keep providing liquidity. Because, yeah, if there's too many people, the APR will just go down. All right. Rahul asks, any way to vet the market making APR you have realized till now? There is, but because everything is on chain, right? Like you can check, you can add up all our trades and see whether the APR we are displaying on our website is actually accurate or not. But I mean, not everyone can do that, obviously. I don't know if anyone's actually doing that. I mean, like, I don't know if anyone's doing that for any DEX. Like, does anyone do that for Radium? I don't know. Not that I know of. So yeah, I don't know. That'd be cool to have though. I mean, like, understandably, I guess people are skeptical of our APRs without any liquidity mining. Like, because it's so different than other dexes where like we're just making profit from trading rather than distributing tokens. But yeah, it is all on chain, so like technically yes. But like me personally, I couldn't do it. But yeah, it'd be cool if there was some app that did that for us. All right, Dominic asks, hello on iPad with Chrome. IDO.lifinity.io does not open the Phantom app and said, wallet not ready. Any idea? Yeah, so I actually saw your question on Twitter and I replied, and hey, now you're here in Discord. Glad to see you join. So this is probably not a question suited for an AMA. I actually responded and said, our team has tried it and it does work for us. So it might be like a problem specific to you. So we can talk about that later. Maybe you can post in the support channel and then we can talk about it there. One step ahead, they're pretty sure about their product. I mean, look about the infographics. We'll stay on Uniswap v2 fork after that. Yeah, I guess the one reason to stay on a Uniswap v2 model DEX is if they have really high liquidity mining rewards, then it can make up for the impermanent loss. But yeah, liquidity mining rewards don't last forever, so long term, yeah. Big Bang says, do you believe AMMs to be a winner take most market? If Lifinity ends up with the largest market share, would you grow into more traditional banking financial services? What other ways can you scale this technology? Is it a winner take most market? I mean, if you, well, I guess if you look on Ethereum, I think that's probably true. I'm not sure. I think Uniswap and Curve have most of the volume, I think. But that could be changing because Curve has V2 pools now. On Solana, we have Serum and Saber, I think, usually with the most volume. And then there's Radium and below that, I guess. it's not like super power law. Um, like we have a bunch of volume, Orca has a bunch of volume, Crema has a bunch of volume, Sakura has a bunch of volume. I mean, I guess yeah, we're earlier than Ethereum is, so I guess that's maybe understandable. Um, and the thing is, like, like in the very, very long term, sure, it's probably winner take most. But yeah, I mean, like, there's still like many new mechanisms being developed, and we're an example of that, right? So it's going to take a while to get there. So I'm not sure if that framing is too useful yet. And I think Solana is a bit unique because it has Serum, and Serum is a new primitive where like professional market makers can basically use their infrastructure that they use on centralized exchanges and basically just port it over to Serum. And it's in many ways the same. Like it's slower than on centralized exchanges and probably a little more expensive because they have to like pay to adjust their orders, their bids and asks. Um, but like their general market making logic, like strategy, I think they can keep it the same. So yeah, it's more competitive here for sure. But yeah, we're basically what Liquidity does is like we borrow that market making logic, which is like much more sophisticated than, X times Y equals K or whatever. Like we borrow that intelligence through the Oracle, um, which is what's so great about our model. Um, yeah. And actually, we have an upcoming article, probably will be released today, where we basically utilize one of the strategies that professional market makers themselves use, where they adjust their spread based on the current volatility in the market. More on that in the article. Something to look forward to. Um, yeah. All right. So next part of your question: if Liquidity ends up with the largest market share, would you grow into more traditional banking financial services? I don't think so. uh, yeah. I mean that sounds like a massive pivot and undertaking. And like, I mean, personally, I don't want to do financial services. I mean, it's just a totally different thing than a DEX. I don't think it's really related at all. Um, yeah. I mean, we're basically just a trading thing, like a place to swap assets. And financial services is like, I mean, now you're just adding on tons of things that we would have to build from scratch. And honestly, is like kind of perpendicular to what we're doing. So, yeah, I don't think so. What other ways can you scale this technology? Yeah, I guess just wait for our article. That's one way, I guess. Um, yeah. All right. Rahul asks if target liquidity can't be determined mathematically and has to be done empirically, how frequently do you see target liquidity changing for a pool? Um, I mean, I don't think that also can't really be determined mathematically because like I said, it's dependent on volume, which volume tends to be pretty correlated with market conditions or volatility, I guess. So I mean, and then we can't predict that, right? Like we don't know when markets are going up or down or when they're going to move a lot. And then also on competition, like we don't know when there will be more or less competition. Um, so yeah, I mean, it's not going to be changing like on a daily basis. Like to do that, we would need to do it like algorithmically, but we can't do that. So yeah, really hard to say, to be honest. Happy 420, Durden. Happy 420, Seth Kudabidi. Rahul, how do you decide on what pools to add to the system? Are there any quantifiable criterias? Yeah, so one is they need a PIF price feed. That is what gives us our competitive edge. So that's one. And then how much volume does that pair tend to have? That will determine how differentiated the pair is from decentralized exchanges. So basically our advantage is that the price of the PIF price feed moves faster than the prices on decentralized exchanges. And so in that way, we're able to avoid impermanent loss. And then also we have this buy low and sell high effect. And that's how we generate the market making profit. So that's dependent on how much volume there is. Those are probably the two main ones. I guess also like we think about like if we're going to market make for an asset, that means we have to buy the asset. We have to own the asset. So it means we have price exposure to the asset. And I mean, this is really difficult because, you know, it's basically like saying you have to speculate on price. And that's not really what we're here to do. We're not here to say like, okay, let's market make for this asset because we think this asset is going to go up. Like if we actually have that opinion, what you should be doing is just buying that asset, right? Not trading it. Like if you think it's going to go up. And we like try to remain like neutral on those opinions, but I don't know, like maybe in some cases it'll be like very obvious that an asset is going to decline in price. And in that case, maybe we don't want to acquire liquidity for that asset. I don't know. Like we're not really into like long tail assets yet, so yeah, it might be more of a future consideration, but yeah, that's also something maybe not too quantifiable, but yeah. All right. Let's see. Let me check Twitter. Oh, wow. A lot more people on Twitter. What's up, guys? Thanks for joining in. All right. Next question. Lebeginho asks, hey, just wondering, the Oracle gives us an idea about the short-term price moves, so it prevents the pool from being instantly arbitraged. But there are still people statistically arbitraging the pools, and we aren't really hedged to that. Is there any plan to also try to get slightly longer term prediction / Oracle to increase even further our AMM profits? So you like, I mean, like TLDR, we aren't getting arbitraged because, so, I mean, I'm going to simplify it, but basically we always quote the true price because we have the Oracle. And in the vast majority of cases, the Oracle price moves ahead of the DEX price because most of the volume occurs on the centralized exchanges or wherever the Oracle is getting its price from. So, so there are what you might quote call arbitrage trades, where somebody trades, like somebody would like buy Sol on Radium and then sell it on Liquidity, because Radium is selling Sol at a cheaper price than Liquidity is buying it at. And so they can make a profit. Now, yes, they are arbitraging. However, we don't care because this arbitrage is not causing us to incur impermanent loss. That's what sucks for Radium, right? Radium is selling Sol at too low a price. That's why they're getting screwed, because they don't know the true price. And it's through arbitrage that they determine, or that their pool balance moves to the true price. But for us, we don't need that. The price that we're buying the Sol at is actually the true price. So it's just another trade for us. It's just another trade at the true price. And so it's actually good for us because it basically just means more volume. Yeah, so it's not a problem for us. Hope that makes sense. So there's really no need to hedge that. Yeah. Autocatalytic says, love the flares idea. Hadn't seen that before. Cool innovation. Any concerns about me buying governance tokens post-IDO on the open market? Concerns. I mean, so I would recommend participating in the IDO because, so basically the Liquidity tokens, as they stand, they don't have any utility. They don't give you access to voting power or protocol revenue or bribes or anything. They're basically just a way to get in and out of the market if you want to increase or decrease your exposure to Liquidity. And the way to get the utility is to lock up the Liquidity for VE Liquidity, and then you can get protocol revenue and voting power and bribes. But if you're going to get VE Liquidity, you might as well get it through the IDO because that means you'll be getting it at a discount. Whereas if you buy Liquidity on the market and then lock the tokens, you don't get a discount. You're just buying it at market price. So yeah, from that perspective, it's definitely better to buy them in the IDO. I would assume that anyone buying Liquidity tokens on the market is for the purpose of short-term speculation. So it's like they think the price is going to go up within the next, I don't know, 24 hours. So they buy them and then sell them a day later, something like that. But yeah. If that answers your question. Gin Billily says, is the volume on our pools page, including Jupiter routed volumes? Yes, it is. So it's the sum of Jupiter volume and then also people trading directly with our DEX. Probably some arbitragers do that. So yeah, it includes both. Glue04 asks, if 30 million is raised, would you still need LPs for the upcoming planned pools? For example, if you plan to open 30 pools with 1 million target each, would you need external LP providers? Let's see. So, I mean, you don't need LPs per se. I mean, I guess we wouldn't need LPs until we fill up all those pools with the 30 million, right? And then once we run out of the 30 million, then when we open new pools, well, now we have no more USDC to use for them. So then those would start off with LP's liquidity. Yeah, continuing with your question. In this example, wouldn't the protocol owned liquidity for these pools be 100% right off the bat? Yeah, they would be. I guess I don't quite understand what role the LPs play. Yeah, so for these pools, they don't play a role. But yeah, we're going to continue adding pools over time. So it's basically for when we run out of the liquidity from the IDO. And then when we make a new pool, well, we don't have anything to add to it. And so that's where LPs can deposit their liquidity. To me, it would seem they would be needed if the protocol didn't have enough capital to fully fund all the pools planned. So to that point, are more pools planned in the short term than the protocol can fully fund on its own from the funds raised? Yeah. Yeah, so we're gonna keep adding pools over time, especially as Pyth adds more price feeds. So that's the plan. My persona asks, how do you handle Oracle price manipulation? Liquidity needs to be much lower volume than the places where price is set. Otherwise, you can get sniped with a price manipulation attack. Does that make Liquidity by definition a niche player for any given coin? So Oracle price manipulation. Basically, this is prevented by Pyth itself. This will especially be true when they launch their token, and then the whole like price provision process is incentivized, and the data providers will need to stake their tokens, and like that will ensure their honesty basically. Right now, that is not in place. However, the data aggregation process basically ensures that this doesn't happen. Or actually, yeah, there's two things. So there's that, and then there's also the reputation part. So the aggregation process, it basically takes a sort of average in a special way. They have an article that explains their methodology, so you can check that out on their Medium. So basically, if one data provider like provides false data, it'll basically get ignored because it doesn't match up with the other players. So then what if they happen to be the only data provider in a given slot? In that case, Pyth just won't publish the data because it doesn't reach their minimum threshold. I think it's 3 data providers. And yeah, so we just won't do any trades on that slot. So basically what it requires is there to be very few data providers for a given slot, and then they need to collude. So they need to agree, like, hey, let's post false data on these slots so that, I don't know, say like we can make a profitable trade on Liquidity, something like that. So, I mean, that's not impossible, right? They could collude, but that seems highly unlikely because I think the reason, so like, first of all, these data providers are like basically large TradFi institutions, most of them, or they're like trading firms, market makers, stuff like that. And I think they joined Pyth because they know that in the future, they're going to be able to earn revenue from providing data. I would be shocked if these TradFi institutions colluded for just a one-time event to make a few trades and like make some money off of a few trades because they manipulated the price data, entirely ruining their reputation. Probably not just in crypto, but like for everything else too. Like, yeah, like, you know, and like they're not going to make a shit ton of money. Like crypto, like the TVL and stuff, like it's tiny, right? Like they don't care about making $1 million if that's going to ruin their reputation. Like, if they provide honest data for Pyth, especially once their token and the staking mechanism and all that goes live, like they're going to have a steady stream of income from providing that data. So yeah, I don't see why they wouldn't prefer that. Like the collusion route just doesn't make much sense. And yeah, all the data providers are like highly reputable in the TradFi space. So like even more so. Yeah, hope that makes sense. Let's see. Yeah, I didn't really understand your second part of your question about like coin being niche or whatever. Anyways, you wrote a follow-up. You say a simpler Oracle price manipulation just involves buying up the coin. Like for example, let's say there's a thin tailcoin SOL market in FTX and a thick tailcoin SOL market in Liquidity. I can just run up the price of tailcoin in FTX on low volume, and I can just sell in Liquidity a higher volume. So basically, this won't happen because I'm pretty sure we will always have less liquidity than on FTX. Because basically, we're getting our price feed from FTX and those sorts of markets, right? So if FTX has like, or if we concentrated harder than at FTX, like everyone's going to stop trading at FTX. And they're going to start trading on Liquidity because there's more liquidity there. And that basically means we're just going to eat a ton of impermanent loss. Now we're like the constant product DEX, sort of, because we're the place of price discovery, even though like we're actually not. It doesn't make sense because like we're basing our price on the lower liquidity market. And so, yeah, I mean, all that to say, like, we're not going to do that because, yeah, the point is FTX is the place of price discovery, and we're relying on that price discovery. And that means we can't have more liquidity than them because then it'll stop being the place of price discovery, and then we're just going to screw ourselves. Yeah, okay. Makes sense. Thanks. Yeah, okay, cool. All right. Binox says, technically, has the team engaged with the RPC provider to ensure that we don't have a shitty IDO experience? For example, Genesis Go to ensure things are smooth. I actually haven't talked to Luffy about that, but like I'm not worried. I think for our IDO, I mean our NFT sale, we used Genesis Go, and yeah, super smooth. I'm not sure what we're using right now. I mean, like last time I checked, which was a long time ago, it was Genesis Go, so it might still be. I'm not sure. But yeah, like our NFT sale was silky smooth. Although I guess we didn't have like insane instant volume like some NFTs do. Like we weren't a 10-second sellout, we were a 2-hour sellout, so it's probably different. But yeah, I mean, we definitely think like we're aware that like there could be a ton of volume, especially at the very start of our idea. So yeah, we do want to make sure that things do go smoothly. So we will beef up our servers and stuff. All right. Dingy Treant asks, have you guys ever considered Liquidity removing other pools? If there's a big trade through originating on your exchange, any thoughts on balancing the pool by removing other pools that haven't adjusted their price yet? I'm not sure what you're asking. You might have to rephrase for me. I'm not quite following the question. But to read the second part, have you guys considered implementing dynamic fees to quote tighter to trade more during times of likely softer flow and quote wider during times where there's a lot of adverse selection from toxic flow? So actually, if you heard me mention this like 15 minutes earlier or something, we are going to release an article on adjusting our fees based on volatility soon. So hopefully today. So keep your eyes peeled for that. And how have you guys adjusted for this low TPS environment? Any special magic with retries or RPC providers? I don't think so. Yeah, no retry logic yet. I just saw today, which project was it? Was it Solend? Some project announced that they implemented retries. And that sounds like a good idea. Definitely improves the user experience, I'd imagine. No one likes to have to manually retry their transactions. So yeah. On the other hand, like Solana actually is improving the the low TPS problem, implementing the quick, and I think one more other thing I forgot. But yeah, so I think it should be a solved problem with time. So yeah, it's also like not our highest priority because we don't think it'll be a persistent problem. But yeah. All right. So you clarified your first question. Add automated taker logic into the pool. Automated taker logic. So you mean, oh yeah, to our other pools, right? Yeah. So the thing is, like, at the beginning, we actually did some of this ourselves. We did perform arbitrage against our own pools. But now there's like a bunch of bots that do that. So there's really no need for us to do it. Yeah. We just leave it to the arbitragers basically. And yeah, they create a decent amount of volume. It's basically the trade example I was giving earlier of like us trading against Radium, or arbitragers arbing Radium and us. But like we're not really getting arbed because we're just trading at the true Oracle price. So it's not a problem. It's just it just increases our volume, which is a good thing. All right. I think I answered all your questions. Let me know if I missed something. Hachi asks, as we know, major volumes only come on ETHLand and AVAX. Don't you think being on Solana is actually making Liquidity capping its growth? Is that true? I don't know if that's true. Especially like the great thing about Solana is some of the infrastructure like Serum and also like Mango and Drift. Like you can just do perps and other probably like options and stuff too. Like you can do so much more on Liquidity because of the cheapness and the speed of the chain enables you to like create better infrastructure. Um, yeah, so like I think that type of trading is definitely increasing on Solana, and like NFTs are kicking ass on Solana, I think. And then maybe the spot trading volume, yeah, maybe Solana is lagging in terms of that. But like that, I mean, it seems like it'll increase with time. It's kind of like a so like I mean, there's two maybe like large sectors. There's like whales, and then there's retail. Yeah, to make it very simple. Whales might be hesitant to use Solana because of security concerns. Like they just want to optimize for their security. So they choose some more well established chain, even though it costs more to trade there, but it's like peanuts to them, so they don't care. Now that'll change over time because like the more Solana's around, the more Lindy it becomes, the more the same it looks as other chains in terms of its security. And then like I mean its UX is like way better. So eventually like the UX might, and maybe the cheapness too, might be factors that like draw whales. And then for the retail, like I mean they're the ones who just care about speed and cheapness. So they will, I mean, I think increasingly come to Solana. Like my gut take is there's very few people switching from Solana to Ethereum. There are people switching from Ethereum to Solana. So yeah, like UX is really important, I think. Like right now, it probably doesn't feel like it much because it's a relatively bearish market. So like you're not seeing huge inflows of new people, but when you do start to see them, I think more and more will come to Solana. So yeah, I mean, I'm not worried about it. Metaverse Explorer asks, easy question, how long till the meme video contest finishes? Well, it's 1 week from when we announced it, whenever that date was. So you can check in the announcements. I'm not sure which day that was. I think it's Monday. Yeah. That's right, guys. We have a meme and video contest. Actually, a meme and educational content contest. Can be in any form. The prizes, one is a number 30 rank flare, which is very rare. And the other one is a mid rarity flare. Anyways, I mean, which is like a lot of money, right? Even the worst flare is worth more than 8 SOL right now. So, yeah, make those submissions. We want the dank memes. We want the viral educational content. I feel like we've been lacking in the memery. So, yeah, there haven't been too many submissions so far. So, like, you know, there's a good chance that you could win. Impress me. Show me what you've got. And Metaverse Explorer says, we'll get his submission today. Let's fucking go. Yes, Metaverse Explorer knows his Rick and Morty. All right, Hachi asks, when Liquidity becomes a DAO, and who will control the funds? So DAO is a vague term. There's definitely degrees, right? It's a question of like how decentralized is your DAO, and this will definitely be a gradual process. We explain our thinking around governance in part 5 of our tokenomics. The TLDR of it is, in practice, we see that most people do not participate in governments because they just don't care enough. And governance actually takes work. You have to actually study to get an informed opinion and make good decisions. And people tend to not want to do that unless there's some incentive involved. So for us, we're basically going to limit, so the team will decide what will be voted on and what won't. And the things we plan to put up for a vote are everything involving money. So especially that means how we use the Liquidity tokens in the Treasury. That's the things we want to put up for a vote because that involves money, and we think people care about that. Then other things like, okay, what should the rebalancing factor for this pool be? Or what should the concentration be? Or what new pool should we add? These are things we don't plan to vote on. One, because people are not informed. And 2, people don't care enough. So yeah, basically voting only for the things that are really necessary and people care about. Metaverse Explorer says, has anyone asked about team expansion? It's probably not required at the moment because they seem to be shipping at a good pace. Yeah, so we do plan to expand the team. I think we mentioned that in part 6 of our tokenomics. That'll be after our IDO. Yeah, I think mainly we'll be looking to add some more devs. And yeah, depending on how crazy things get in the Discord, maybe some more community manager types. What else? Maybe some other roles that I'm not thinking of right now, but yeah, we are looking to expand the team. Boom. We've reached the end of the questions. Let's see. Does anyone on Twitter have any questions? You can raise your hand and I can bring you on stage. Metaverse Explorer, last question. What new NFT should I be minting? Definitely the wrong question to be asking here. Give me financial advice. You should mint VeLifinity. No financial advice for you, sir. Cool. No questions on the Twitter. Technically, VeLifinity is an NFT, right? No, because it will not show up in the NFT section of your Phantom wallet. I mean, if you mean in the sense that like every VeLifinity is different because it depends on the lock time, in that sense, yeah, kind of. But yeah. All right. We'll be doing another AMA right before the IDO. So yeah, no need to prolong this one, I guess. Unless one step ahead has a question, typing. Explain quickly what VeLifinity is. So VeLifinity is locked Lifinity. You can choose to lock your Lifinity tokens for anywhere from 1 week to 4 years. And the longer you lock, the more VeLifinity you receive. Once you receive your VeLifinity, you can begin to unlock it. Then it'll gradually begin to decay, and your Lifinity tokens will gradually unlock. And VeLifinity is what grants you access to protocol revenue and voting power and bribes. There you have it. One step ahead, and we can swap it to Lifinity. No, you cannot. So I mean, that's what the locking means. Locking means you have to wait for the lock period for your Lifinity to unlock. But unlike some other VE tokens where all your tokens unlock at the very end, with us, your Lifinity tokens unlock gradually. Anyways, you should read part 2 of our tokenomics because it explains everything in full detail. And it has graphics that explain it. So yeah, the visuals will probably be helpful. So yeah, check that out. Metaverse Explorer, I'm worried about the first come, first serve for VeLifinity. Have you guys noticed or been approached for special allocations or for you to purchase some for a singular party? I mean, kind of. Some people have asked about that. Like, hey, we want to form a group and buy like a shit ton of VeLifinity or invest like a shit ton of USDC. But yeah, I mean, like we haven't said yes to anything. I mean, we're not gonna privilege any individuals. So yeah, it is simply first come, first serve. Can VeLifinity be sold or bought? Do we really have the tokens in our wallets or stored by the team until unlock? So it's neither. So you can't sell or buy because you can't transfer VeLifinity. Basically, VeLifinity is like a property of your wallet, basically. It's not a token like the way you normally think about it. So you don't have the tokens, but the team doesn't either. It's more like a number associated with your wallet. And that's why you can't transfer it. It's a property of your wallet, and you can't transfer your wallet. So, yeah. Does that make sense? Yeah, you can also think about it as Metaverse Explorer says, So the Liquidity tokens are locked by the contract and then vested over time if you put your V Liquidity into the unlocking state. Yeah, part 2 of the tokenomics, one step ahead. You can find it in the resources channel. Hachi asks, from which point would you decide first come, first serve? When the IDO starts. Like if I am right, I can deposit my USDC right now as well. Yeah, so it's not open right now. It'll open at the time we mentioned. I think it's 15 o'clock UTC. But yeah, Metaverse just posted an image. So if you go to our IDO website, it has a countdown, so you can check there. 2 days and 8 hours left. K57, or wait, let's see. Kalan asks, in the event of someone getting hacked, would it be possible to update the VE Liquidity address? So if you have 4-year locked VE Liquidity, then you can transfer it using X Liquidity. But otherwise, it is stuck to your wallet. I mean, in one way, you could consider it like an anti-hack mechanism. Because like usually hackers just check all the tokens in your wallet and then just withdraw all them, then they're done. But then they probably didn't check if you had VE Liquidity, did they? So, that might be an upside. K57 says, okay, thanks. So if all the tokens are sold, I will not be able to buy on secondary market. I mean, we will have a Liquidity USDC pool, so you could buy there. But yeah, participating in the IDO is better bang for your buck because you get the discount if you're planning to lock your tokens. Any recommendation to avoid noise to get in first? Like, how do I make sure that I get in the queue in time? I mean, just be at the website at the launch time. And yeah, deposit as soon as the clock runs out, reaches 0. Oh, we have a request to speak. Nice. All right, Chief, I have welcomed you to the stage. What's up? You are muted, in case you are not aware. All right. Hold on. Give me a second. I had my earphones turned on, so the audio was off. All right. Sorry. Go ahead. Speak.
Yeah, no worries. Yeah, I just know the Solana botting, is pretty popular. So I just wouldn't be surprised. Maybe the ship has already sailed, but I wouldn't be surprised if a lot of whales or sharks got in before retail, we'll say.
Right. So I think it's different. So like usually botting is a thing with NFT sales. And the thing with NFT sales is you want to get multiple transactions in because you're trying to buy multiple NFTs. And for that you need multiple transactions. With us it's more a matter of like how much USDC are you investing? And you can do that all in one go. So you only need one transaction. So I don't think the botting would really make sense in this context.
Yeah, I think that's fair point to that. Yeah, fair enough. It's probably there's enough value being offered where it should be absorbed in like 5 seconds. Yeah. Thanks for your response.
No worries. Thanks for tuning in. Let's see. All right. We have some more questions in the Discord. Let's see. Where am I? Okay. Metaverse asks, please remind me the avenues for getting normal affinity. Serum pool. So actually not serum pool. The Liquidity USDC pool will be on our DEX. The serum pool will be for X-Lifinity USDC. And yeah, there's a good reason for that differentiation. You can read more about it in part 2. But and then other than that, where does singular Lifinity come from? Basically, that's it. Otherwise, you can buy VE Lifinity by exchanging it for LP tokens, and then unlocking your VE Lifinity so that you can get Lifinity. But that's about it. We don't do liquidity mining or anything like that. So yeah, that's basically it. Safe says, still very new to this. So the benefit of getting in now versus, say, in a month's time, when I'll have some more capital freed up, means you get some kind of discount on pricing? Yes. Yeah. Basically, the IDO is a way to get a discount. By locking up your tokens, you get a discount on them. Yeah, so the other way you could get a discount in the future is by buying VE Lifinity using LP tokens. This is in part 1 of our tokenomics. And so the discount for that, it basically increases from 0 to 50% for locking for 4 years, which is the maximum. And then locking for a shorter period will have a lower max discount. So basically you have to wait for the discount to reach that. And it's not guaranteed that it'll reach the 50% because if someone buys before it reaches that, then the discount will decrease. So yeah, the IDO is like your only guaranteed way to get the max discount. But yeah, it's possible to get discounts on the future in the future as well. It's just not clear how much of a discount will be possible. It could be the max, it could be lower, who knows? It depends on how much demand there is for it. So Metaverse, I'll have to repeat that question. Which question? One step ahead, I just asked which whale is hiding here. Oh, that one. I mean, wait, what do you mean? This 30 million USDC target can be raised in a few minutes. You told you are egalitarian, so yeah. I mean, yeah, it's possible. I don't know what you suggest. So like the options is basically like to put it simply, either we cap it or we don't cap it. And historically, when we've seen raises, uncapped raises, Mango style, like a traditional Mango style IDO, like these just get so much capital because retail doesn't think about valuation. They're just like, how much do I want to invest? And they don't think about how much has everyone else invested, which determines the valuation. And so the valuations get very inflated, and that tends to result in decreasing price after the IDO. And so the other thing is, in our case, like we don't want more than 30 million. So like if we make it uncapped, like, so the upside is that everyone who wants to invest is guaranteed to be able to invest. The downside is people will probably overinvest, and then we have more capital than we can effectively use. So basically we're doing a trade-off where it could be the case that not everyone who wants to invest will be able to invest, but our valuation will be reasonable and we won't have too much capital. That is the trade-off that we are choosing. Like you can't have it all, you know? No matter what IDO method you choose, like there's going to be some form of downside, and there's trade-offs everywhere. So yeah, this is the trade-off we chose. Kalan says, if IDO sells out, then the only way to get additional VE Liquidity would be to try to find Liquidity somehow and re-lock it up, right? Immediately after the IDO, that is true, but later on, once we develop the program for selling VE Liquidity for LP tokens, then that is another way. You can buy VE Liquidity at a discount with LP tokens. Metaverse says, no, please don't do traditional Mango token. We'll just dump right after. I mean, yeah, historically, that's what we've seen. So, yeah. One step ahead, whales can have 20 million to lose. To lose? Fix a maximum invest. I mean, so maximum investment per wallet address doesn't really work because then you can just use multiple addresses. I mean, that's a way to benefit botters, really. Like, say we like capped it at like 10K. Well, then the people who can bot can just create multiple addresses to invest 10K simultaneously. So yeah, it would just benefit them. Fractar says, I'm a bit late, but where can I get some info on the team? You can check out our team channel. Just linked it to you. We are anonymous, so you're not going to find a whole lot of information on us, like our names or anything like that. But yeah, there's some basic info on us. Let's see. Mm-hmm. Okay. All right, well, we've once again reached the end of the questions, I think. Although one step ahead is once again typing. No one raising their hand on Twitter. I trust this project. I just hope you evaluate your system more than 30 millions. I mean, you know, we wish we could like effectively utilize more millions, because then we could just do a Mango style. But yeah, we're really limited by the total amount of volume going through Solana, and also like the available Pyth price feeds, stuff like that. Yeah, so you know, over time we'll be able to scale beyond 30 million, but not immediately. So yeah, we think it's the best way for now. Fractars is about the team. Why to get anonymous? I mean, how can I get over it to be reassured about project security? All right, so I actually explained this in elaborate detail earlier in this AMA. So, and we're going to release a recording of this AMA. I don't want to talk about it again for like 10 minutes. So yeah, I encourage you to check out the recording once we release it. Yeah, it's a pretty common question we get, so. All right. Is it time? Is it time to call it? Thanks for stopping in, Metaverse, Autocatalytic, Binox, all the regulars, and all the new people. How many people do you want to recruit? One step ahead? I'm not sure. I think Luffy has a better idea of that, as he'll be doing or like leading all the all the hiring. So yeah. All right, we're gonna call it. Yeah, we'll let the community know once we're hiring what we're looking for and stuff. Suggestion: add the reason why the team is anon in team channel. Yeah, maybe so. Maybe so. All right, thanks everyone for stopping in and hanging out for this long AMA. I need to pee. Fractar, we do have a roadmap. Check out part 6 of our tokenomics and resources. And I'll be happy to continue answering questions in the chat. Just gonna close this AMA down. So yeah. Thanks for stopping in, everyone. Good questions. Good times. We'll have another AMA before our IDO. So yeah. All right. Until next time, guys. Peace out.